up? So we're going to be doing a video on Forex, and I'm going to give you the best Forex trading strategy. Now, this is strategy that I've used. If you want to use it, go ahead and use it. But remember, I always say you must know the basic stuff. So don't just go into the market and you want to trade. It's not a get-rich-quick scheme. Trading is difficult, requires patience, requires discipline, requires mastering your psychology. It's just something so complex, just like any other skill. But the thing is, if you master trading, you are sure to make money. So today I'm going to show you one of my best trading strategy and very simple strategy. Sometimes I think we complicate our trading, and that leads to the losses. So the more we start trading, the more we trade, the more we complicate it, trying to hit the jackpot or get the golden goose or whatever it is. All you need to do is have a very simple strategy that works for you. There are like thousands of strategies out there. I'm going to give you one that has worked for me and that you can use and start trading as soon as possible. But remember, you must have the foundation well laid out. So you're not just going to jump into the strategy. And remember, you can always come to me. I provide teachings on these strategies that can really work, that I've used personally. But don't come and waste your time trying to get the basic knowledge from me. It won't help, because I'll just be, spending so much time talking about what is Forex trading and stuff like that. There's lots of information about Forex trading. Get that information out there. I allow you. I'm not coming here to make you pay for something that you can find online. Then when you come to me, all I need to teach you is how to trade. When I say how to trade, I mean exactly what you need to do, the strategies you need to follow, how to enter, how to exit, and stuff like that. So that you don't have to waste time and waste your money paying people to learn things you could actually get online for free that I give here every single day. They're on different books. I'm also writing a book on that. So it's just the basic stuff. Know them first. There's nowhere you can just jump in without knowing the basic stuff. So don't try that. You're going to fail. So Ken's Money Matters, you can check my website, www.kensmoneymatters.com, and you can always reach out to me. My number is in that website, straight to my, and then we can talk about how to go about it. And the main thing is we focus on the strategy, how to make it with the strategy. Anyways, guys, without further ado, today I'm going to show you a simple strategy you can use to start trading. An amazing strategy, very simple, very direct. So if you have the foundation set, you can pick this strategy, but practice it, sharpen it, and don't be that person who gets tired of a strategy within 1 week or 2 weeks because you've lost money. No, every single strategy that is working is because someone decided to sharpen it, to focus on it, to drill down on it, to kind of make it that good, perfect move. Because all the strategies require that knowing exactly what point to enter, knowing what point to exit, knowing when to stay out of the market as well. So guys, don't just jump into it because you have a strategy. That won't help you. Anyways, let's go on to my screen. Let's talk about Forex trading, guys. I'll show you a few things. And please remember, down in the description, you will find a link to a brokerage account, FX Pesa. That is the one accessible to you. The one I'm using today to do this analysis is my IG. I have different. I have FX Pesa, I have IG, which is only available in the UK at the moment. Not only in the UK, but in the West. I know you can access it in Kenya, but the support won't be as great. So you want something you can easily use in Kenya. You know where to find them. You can access it. And FX Pesa is the best in Kenya. I use it all the time to analyze my trades, but because of what I want to do today, I want IG. So because IG is what I use to enter most of my trades. FX Pesa is Kenya local. Anyways, guys, so the link to the demo and to the live account will be below in the description for FX Pesa, where you can trade or practice trading. So I won't really talk about the interface here as such. I'm going to talk about trading. So let's say you want to trade. You come to your platform, you have a brokerage account, you know your platform well, you know where the indicators are, you know the time intervals, you know how you can split your charts, you know the time range you're looking at, you know the indicators that you have, you know the drawings that you can make, right? And other stuff on your platform. Just make sure you know your platform. What do you want to do next? So when I come here, you're prepared to trade. These are very simple strategy, and I want you to follow it as I say it. Most of the time, the fight is between the buyers and the sellers. And that means at some point the buyers are winning, at some point the sellers are winning, and vice versa, right? So sometimes it's very easy to analyze a trade. So you look at this chart, no drawings, okay? You use what we call price action to analyze trades. So let's come here and you can see what has been happening. So if you can see from this day on the Friday of 14th July, the market has been trending down on the daily time frame. You have to remember that, on the daily time frame. I will teach on multi-time frame analysis. Some people, when they want to trade, they only go to the time frame where they're going to place their trade. I start from a higher time frame to help me understand what is happening above me. So I don't trade on the daily, but I start my analysis here. Why? Because I want to know exactly what's happening on a large scale, so that I'm not like just lost in my own cocoon, thinking that I know everything in my 1 hour or in my 15 minutes. So what you want to do in this case is look at what has been happening on the daily. You can see it's a clear downtrend. But because the daily is such a large one, you want to look at the last few days, right? And as you can see, the last few days, again, clear downtrend. So you can see a bigger, there was a retracement on the Monday, 4th of September, then it's been going down from 5th, 6th, 7th, and today, Sunday, is going down when I'm shooting this video. So as you can see, so you want to look at the last few days. So what I like doing is I want to look at the key price reaction points on the daily. What do I mean? It means you want to look at the support and resistance, or if it was a trending market, you want to look at the trend. At what point of it, or if you're using moving averages, you want to look at what is it using as support, because support can be different things. The market can use moving averages, the market can use exponential moving averages, the market can use support or resistance areas, the market can use a trend line, okay? So there are different things that the market could be using as support or resistance when it is trending. So this has been trending down. You might want to have more like a trend line before, so I can have a trend line coming out from here, pushing the market down. You try to connect as many as possible. Nice one. Downwards, I want to have a support area on the daily, okay? So you can see there's a strong support here, and I want to use the recent support areas because it's a daily time frame. I don't want to worry too much about what happened way back. So I'm quite interested in some of the areas that the market has reacted in the last few days with regards to the supports. I'm looking at this area as well. Well, I don't know if I can push it down to that area. It's very significant. So I'm looking at this area. Around this area, there's a market reaction point. Remember, the line is not like an exact point. The line is an area of value. It's an area of price action. So consider it like an area. So never look at the line as a line. So never say, oh, the market has to touch my line. No, the market doesn't care about your line. It doesn't know your line. It's an area. So in your mentally, you should know this area that we've drawn as a bigger area. So the market could have reached where it reached yesterday, the last candlestick yesterday. Sorry, this was on Thursday. So you can look at where the market reached on Thursday and Friday. You can see there's an area there. But you can also see back here, if you can see my cursor, hopefully, where it reached. Anyways, so I'm looking at this market and I'm marking these points because I know if I go to the 1 hour, and let's say I'm going with a trend, like you always say, trend is your friend. You want to go with the trend. So the trend is going downwards. I'm going with the trend, but I need to know where the price is likely to react on the daily. So it could be that, yes, it's going up on the 1 hour, but when you go back to the daily, there's a point that is like a ceiling point, or there's a support point whereby it's going to react. But because you are so focused on the daily, or you're so focused on the hourly or the smaller time frame, you forget about the action points on the daily. So it could be right at support on the daily, but because you cannot see that on the 1 hour, you end up trading it and then you're losing money. You're wondering what happened. You see, for instance, the market has been trending down, right? This is the hourly chart. If you take this market around this area, you can see there's a support system around this area. And that's the same thing we've drawn here. So yes, on the hourly it look big, but this is the same area that you want to be careful around, right? You want to be careful not to just take it down. And if you take it down, you want to be careful that around this area, there's a price reaction that is likely to happen. Now, of course, you want to come to the 1 hour and also draw the lines. I usually use different colors of lines to draw on the 1 hour, just to show me like, you know what, this one is done on the daily, this one is done on the 1 hour. Because if you just draw the daily, you find that there's this big gap and you're wondering what's happening. So sometimes it's the same area, same reaction point, but you want to make sure you also have it on the 1 hour trading frame. Okay, make it easy. Let's go back to the daily. So we know that there will be some kind of price reaction up here, and I'm expecting it because you can see the push back up on the last candlestick. The last candlestick on Thursday, and then there's this on Friday. So of course today is Sunday, so the market hasn't really opened yet until later today when the Australian markets open. But you can see very clearly there was a push down, a clear push down, 3 candlesticks dominated by sellers. Then on Thursday there was a clear push down towards the end of the day. Now I'm still expecting that we would have sellers in this market, right? So we'd still have sellers in the market, and that's what happened on Friday. On Friday, what happened? You can see it tried to go back up because of that push, but sellers still came back in and pushed the market down. But that tells you that down here there's a price reaction, and we might just be experiencing a reversal going up. So we have to be very careful about that before you take it going down. What I wanted you to do is, for instance, if you see a candlestick, the last few candlesticks on the daily are really majorly sellers or buyers, what likely are you expecting? So the market has been going down. The last few candlesticks are all dominated by sellers. Then you're expecting to sell. That the sellers are in this market still. So what do? You come and confirm the trend on the 4-hour chart, and you can see the trend is moving down. I like the 4-hour chart because it can give you what has been happening in the last few days, and you can see clearly where the power is. Are we going down? Are we going up? And now that I'm seeing the 4-hour as well, I can see that there is an area here that is of interest that I need to be careful about, even if I wanted to go down. And this is why sometimes people fail. So if you look at that area, right, and you see that area as well on the 1-hour chart. You see this area, right? See that? Those 2 areas are showing me something. This could be a double bottom, and therefore we are getting ready to rally back up. Okay? And therefore, even if it was trending down like we've seen, the 4-hour is telling you something, the 1-hour is telling you something, the daily is telling you something. You don't want to rush down. You want to rush down after confirming. But remember, we also have an area of value down here where the prices could bounce back and go back up. So don't just come blindly and follow the trend that you have seen on the daily. So you come down, look at the 2 hours, same thing. Boom, gets to that area, boom, gets to that area, is reacting around that area. I want to wait out. I don't want to rush. I come to my trading one where I'm going to place my trade. You see the areas as well, right? Clean areas. What do you do next? If you want to wait for an opportunity to enter the market, this is a good time. Okay, so on Friday, you could see it started before the end of the day. It started going back up. We are not sure how far it will go back up, but it might come back and test this level here, this area here. Let's do and test that level, and let's give it a different color. I usually just make it red so that I know this was drawn on the 1-hour chart. So we could be expecting that the same thing that happened when it reached here before, this big circle area, could happen again. Now it's in this big circle area. Now you have your area of reaction or price value area. You also have candlestick confirmation, which is the last level of confirmation. So you want to confirm your candlesticks, right? So of course on Friday this happened too late, and therefore the market was closing. But you want to confirm your candlestick. What type of candlestick do you have? When it reaches that area of reaction or price reaction level, does it react, or does it give you a candlestick that could show you that things are about to happen? If you look at it previously, you can see that there was a lot of rejection around here. One rejection, rejection, rejection. Okay, with a big push up, it went all the way up, right? Came back down, double tested that again. So that was a double top up there, or actually a double top, dropped to the same level again, and now it's preparing to go back up. What do we expect? Chances are it might come back to this area. But remember, the trend of the market hasn't changed yet. The trend has been going down, so you have to be careful about that. If you want to just trade with the trend, you wait for it to come back to this level, or to come back to this level again, and then see if it's gonna come back down to follow the major trend. But some people, they trade bounce back, so they can trade this one, get back up here and get their money and out. If you want to find an entry point, you can even come to 15 minutes, and the 15 minutes would have an entry point for you. So you will look at the candlesticks that are forming in the 15 minutes and see if you get a nice entry point. But remember, your trade is going to be placed on the 1 hour chart. Okay, this is where you place your trades, give you enough time. So yes, this thing could come back to that level, then drop again properly. It will have just formed a triple top, but that's not assured. It could also be a reversal. Most of the time it might not be a reversal, because a reversal takes a very, I would say, a lot of rejections for a reversal to happen usually, commonly. Okay, not all the time, of course. There's no surety, there's no guarantee. I think it will come back to this level, hit this level, and then I look for a drop down. If someone wants to trade the backup, going back here, you can trade that one all the way to that level, then get out, depending on how you want to trade. The main thing is you want to follow what's happening here. If you want to move with the momentum, look for an opportunity to go down. Okay, if you want to trade the bounce back, you can trade the bounce back, but know where to get out. But if you're patient, any day, if you make a decision that you want to go down and you've seen that the previous candlesticks are, let's say, going down, then you make a decision that you want to just go down. Do not change your mind. Wait for an opportunity in the 1 hour or the 15 minutes that goes down. So for instance, on Friday, if someone had decided that all they wanted was to go down, because on the daily, on Thursday, they saw a very big bearish move. So they expected that the sellers would still be there in the market on Friday. As you can see here, on Wednesday, there was a big bearish move. Thursday, big bearish move. Friday, a bearish move. Okay, it was a bullish move than a bearish move. That was more of like a doji. But if someone was here on Wednesday, they would say, wow, the market closed so bearish, I'm expecting that the sellers would sit in the market. So what do? They would be waiting for an opportunity to sell in the market on Thursday. Same thing on Thursday, bearish market, you're waiting for an opportunity to sell on Friday. So if you decide that is your strategy, do not change your mind. Come back to the 1 hour, look for opportunities to sell, but you must look for a resistance area, a place where the prices are reacting, and look for a nice candlestick for entry. Remember, entry, entry, entry. So you can even come to the 15 minutes. If you're looking for an entry, you can see that big bearish move here right at the price reaction point. If you took that, you made good money, as well as here. So whatever you make your mind on, you decide the trend you want to follow based on your analysis. Make sure you stick by it and only look for opportunities to support your analysis. Don't just go and say, oh, I've seen a candlestick that is a candlestick pattern that is good, let me take it. No, it should support your analysis. The candlestick patterns should happen at price reaction levels, number one. The candlestick patterns must happen based on the trend you want to go to, where the major trend is going most likely, number two. And the candlesticks have to be very clearly communicative. So there must be like a bullish one, or an inversion, or an evening star, or something like that. Whatever it is that would give you a sign that you're supposed to now take the trade towards the direction that you want to take it to. But don't just look for them anywhere in the chart. Look for them at the right places. And with that, I've given you one of the simplest trading strategy that you can ever find. Let me know if you have any questions below, and remember, the link is down below. If you want me to teach you these strategies one-on-one, properly attuned to you, reach out to me. Otherwise, until next time, I'm out.